Hi, and welcome to Money and You. Today we're starting out with a new series about investing in which we'll be covering the very basics. This is suitable if you are just now starting out and looking to learn some basic principles. So let's get started. So you might have heard about stocks lately and been asking yourselves, what are they, how do they work, what is an IPO, and how do I make money with them? Well, today we're going to cover the basics. So let's start by answering the question, what are stocks? Simply put, stocks are a piece of ownership in a publicly traded company that anybody can buy. People who buy into the company are known as shareholders and are entitled to a certain amount of the company's profits. Stocks also have other perks like receiving dividends, which are cash payments from that company, and voting rights to determine who runs the company exactly. How much a shareholder gets depends on how much of the company the shareholder owns. If you were to buy 1% of a company stock, you would own 1% of that company. Just like if you were to cut a pie into 100 pieces and give one piece to 100 different friends, each person would own 1% of that pie. A private company can attract investments in a variety of ways, but those are usually not so accessible for the average investor, and they are a topic for another video altogether. For a company to be traded on the stock market so you can buy the stock, it needs to become public. This is done through what is called an IPO, an initial public offering, which is the process of offering shares of a private corporation to the public in a new stock issuance. Before an IPO, a company is considered private. As a pre-IPO private company, the business has grown with a relatively small number of shareholders, including early investors like founders, family, friends, along with professional investors such as venture capitalists or angel investors. An IPO is a big step for a company as it provides the company with access to raising a lot of money. This gives the company a greater ability to grow and expand. The increased transparency and share listing credibility can also be a factor in helping it obtain better terms when seeking borrowed funds as well. Typically, this stage of growth will occur when a company has reached a private valuation of approximately $1 billion, also known as unicorn status. However, private companies at various valuations with strong fundamentals and proven profitability potential can also qualify for an IPO, depending on the market competition and their ability to meet listing requirements. An IPO can also be seen as an exit strategy for the company's founders and early investors, realizing the full profit from their private investment. Let's look at an example. We can use Elon Musk's decision to take Tesla public. As an example of this, Tesla went public and first sold shares in the stock market in June 2010. They sold a total of 12 million shares in that company that raised $200 million for Tesla. This allowed Tesla to fund their business expansion in a multitude of ways, including increasing their manufacturing capability, developing new car models such as the Model S, and creating their autonomous driving system. At the time, there were a total of 100 million shares in Tesla, so the 12 million shares they sold to the public meant that Tesla had given up a 12% ownership in their company in exchange for the 200 million. Okay, well that's how they make money, but you might be asking yourself, how do I make money out of this? Let's say you decided to buy one share of Tesla at the start of this year. You could have paid around $110 for one share. Today, at the time of recording this video, which is about 8 months later, that share would be worth $240. This means that someone was willing to sell you a share of Tesla at the start of the year and that someone is willing to buy it from you for $240 today. If you believe it's worth even more, you can continue to hold it for as long as the company is operational. If you do sell, you just earn a profit. Great stuff. Exactly why this is happening is due to a number of different factors. But generally speaking, the reason why you made money on your investment is because Tesla as a company is growing over time. They are producing and selling more cars, reducing their costs to make those cars and building more factories. They are gaining some ground in the car market against competitors, and these are all good things. However, you should keep in mind that things are not always sunny in the stock market. If you bought that Tesla share and Tesla ended up struggling to produce and sell cars, it would be a much different story. The stock price would have declined and you would have lost money. Remember that. Yes, stocks sometimes go up, but they also sometimes go down. It's just not as easy as buy stock and get money, or as buy low and sell high. Now, having known the basic principles, we should also consider where you can go and buy stocks. Well, you can only buy and sell stocks through a broker. Let me explain how this works quickly. Public companies list their shares on what are called stock exchanges. This is where people can go to buy and sell stocks to one another. Here you can buy shares in many of the most well-known companies in the world, including Amazon, Microsoft, Apple, and many more. When you want to buy a stock, you are actually buying them from somebody else who is selling them. So naturally, we need a way to connect you, the investor, to the stock exchange. This is where the brokers come in. A broker connects you to all the other buyers and sellers in the stock exchange. so they can match up your buy order with somebody else's sell order. In the case of Tesla, you want to buy a share, right? So the broker will find you somebody that is willing to sell you a share of Tesla. There are many different brokerages around the world, and each country has different brokers that you can work with. You will already have heard about Robinhood, TD Ameritrade, Charles Schwab, and Fidelity Investment. I would suggest you look into different brokerages in your specific region to gather some more information about which one you should go with. And while I did use Tesla as an example, I would highly recommend that you learn a bit more about the stock market before making your first purchase. Well, that's about it for today's video. If you like the content and want to support the channel, consider subscribing to my Patreon, link in the description below. You can also help the channel grow by hitting the like button and subscribing. This was Money and You. Thank you for tuning in. Have an excellent day.